Hello everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Welcome back to another episode of our weekly exploration of price action analysis. Well, before we kickstart this session, let's run through our daily routine by confirming that we are good to go this morning. So if you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing hi in the comment section, please. So your highs will just give me a feedback that we are very much on the same page, and then we will kickstart the session. So I would like to see your feedback, please. While I load up my charts. Okay, so I can see a handful. All right, thank you, Triam. Good morning to you. Good morning, Safan. Good morning to you, Naniam 521. Hey, Carrie. Good morning to you. Thank you very much. Triam. Good morning to you. Marco Zuda. Good morning. Thank you very much. All right, so with these confirmations we have here, I think we're on the same page, and in that regard I welcome you once again to yet another promising edition of the X-Trend Speed Live. My name is Sharif Daramola, and for the next 1 hour I'm going to be your host, as I will be taking you on a trading journey where we shall be dissecting the current market condition from a technical standpoint using simple and fundamental tools such as trend lines, key levels, and chart patterns to gain valuable insights into the historical price movement of these assets on our watch list. Well, so far this week we have 4 major assets which we have been monitoring since the week began, which includes the US All Spot, the XAUUSD, popularly known as the gold spot, the USTech100, and finally the GBPUSD. And in fact, we've been doing pretty well across the assets, and we are going to be looking at how we are going to be managing our current positions if we have any, and see how to position ourselves ahead of the New York session today. Remember, today is a very important and significant day as we are heading into the last trading day for the month of October. And considering the fact that this is the last trading day of the month, there are tendencies that we could see some volatility, especially in an environment where it becomes much more unpredictable, as majority in the market will be rounding off on some of their position, which would reflect on the chart as potential reversal setup. So we are going to be taking all this into consideration while we look at the current market conditions today. For those of you who are joining us for the first time, you highly welcome on board. I'm very excited and glad to have you around with us this morning. Well, you may be asking, what is this all about? Well, just a quick summary. As technical traders, we usually gather here on a daily basis in anticipation of the New York session, where we manage our existing trading positions and of course use the data we have on the chart to position ourselves ahead of the New York session on a daily basis. It starts 10 a.m. UTC, 11 a.m. West African time, and I encourage you to stay tuned in so you don't miss out on any of the valuable ideas we shall be deliberating on today. And I also encourage you to be part of our subsequent editions, as the more time you spend with us, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. So once again, you are welcome on board. So with that being said, we will be diving right into the business, and as usual, the first thing we do is to check on the economic calendar. And for those of you who have been part of this community for a while now, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. So on the economic calendar, we usually focus on high impact events from economic dockets that affects the assets on our watch list. And based on the asset we have this week, we are going to be looking at features from the United States and the United Kingdom economic dockets. However, for today, Tuesday, October 31st, we do not have any high impact event. So I took it a step further to include the medium impact event, as at least this will give us an insight into how we can position ourselves ahead of the New York session. Now, the first event here is coming in from the United States, and that is the employment cost index. And this event here is coming up in about 2 hours from now. And for those of you who don't know, this data is released by the US Bureau of Labor Statistics, and in fact it is a quarterly measure of the change in the price of labor, defined as compensations by employee hour worked. Now, this data here gives us an insight into the labor sector, and it's is a measure changes in the cost of compensations, not only for wages and salary. So we are looking forward to what the actual data is going to be on this one. Well, for the previous quarter, we had it at 1%, and we have consensus projecting another 1% for this quarter. So we look forward to see what the actual data will be on that one. Then we also have the housing price index and the Chicago Purchasing Managers Index and the Consumer Confidence Index, which is one of the important data that we look forward to today, as a high level of consumer confidence stimulates economic expansion, while a low level drives to economic downturn. So the Fed will also want to be looking at this, as it also has a tendency of influencing the interest rate decision coming up much more tomorrow. So generally, a high reading is considered as positive for the US dollar. Though we do not have any previous data here, neither do we have the consensus, but I think that a couple of hours into that session, we will be seeing some updates on the economic calendar in that regard. So with all the information we have gathered here, it is time for us to move into the chart and look at things from a technical standpoint. But one thing I would like us to know here is that as technical traders, the anticipation of this event alone has a tendency of influencing market sentiment, which reflects on the chart as price action. So talking about price action, the first asset on our watch list for today is going to be the US Oil Spot. Now, on the US Oil Spot for today, we are in fact in the last 24 hours, we have quite an interesting situation going on here, as we were able to take advantage of a bearish opportunity, and currently we have price action, our position running with over 100 pips in profit. Now let's run through what we really saw at the beginning of the week, which led into the situation we have here. Now, at the beginning of the week, the first thing we observed on the 1 hour time frame was this beautiful ascending trend line after connecting the series of higher lows, as you will see here. And of course, you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we do want to be looking out for buying opportunities, and not only when the trend line is broken to the downside can we start considering selling. Now, outside the ascending trend line here, we also were able to identify a range. As you will see, price action was initially confined within the $84.60 level and the $83.85 area since the beginning of this week. And whenever we notice this kind of flat range like this, you know how we do it in this community. We exercise patience and wait for a signal to come, either in the form of the breakout of the resistant line of that range to give us an opportunity to buy, or the breakdown of the support line of that range to give us an opportunity to sell. Now, look at what happened here a couple of hours into the New York session. We saw our price did break down our support line at the $83.85 level. In fact, this level interestingly shares a beautiful confluence with that ascending trend line we spotted here. So a breakdown of the $83.85 level resulted in the breach of that ascending trend line, giving us a bearish signal. And in fact, if you had missed out on that opportunity, the market was kind enough, as you will see here, it came back, retest the structure, and since that moment, price action spiraled all the way to the downside. And if you are taking advantage of that opportunity, we saw our price moved over 200 pips before it got caught in this consolidation phase. And if you still have your sell positions running at this point, you'll currently have about 105 pips in profit at this point in time. And for those of you who took advantage of this opportunity, well done, and kudos to you for being on standby to capitalize on this move. Now, as usual, you know how we do it. Whenever price action moves significantly well in our favor, the next thing we want to be doing is to move our stop losses and secure the current sell position. And if you would ask me, I will suggest that anywhere above the $82.80 level and let's say the $83.30 zone seems most appropriate to secure this current sell position. And remember that while we are trying to secure the current sell position, let's ensure that we leave enough breathing space for price action to move around. Now, with a well-secured position at this juncture, what is going to be our next line of action? How do we intend to capitalize on the next move as we head into the last trading day of the month? Are we going to continue selling, or are there chances that buyers will come in at any point in time to take sellers out of their current sell position? Now, if we look at things from a fundamental aspect perspective, based on what has been going on here in the last 24 hours, it's quite clear that the current sell position may be as a result of a retracement in oil prices, which seems to be driven by an increase in open interest and volume. These indicators suggest that there may be a further weakness in the commodity in the near future. However, it is important to consider that the recent downtrend in oil prices could be limited by the escalating tensions in the Middle East, as you all know that the fear of potential oil supply disruption is a possibility, and this is one thing that investors will be keeping at the back of their mind. And definitely it will be influencing the impact of prices in the near future. So we are at a very crucial juncture in the market right now where anything could actually happen, which further buttresses the importance of securing your current sell positions before making any decisions going forward. Now, before we go into the details of how we are going to be planning for today, I would like us to take a quick look at the higher time frame so we can have an holistic perspective into what is really going on in this market. And for the sake of those who missed out on our earlier session, they have the privilege of being on the same page with us. So at the beginning of this week, we started our analysis on the daily time frame, where we took into consideration the nature of price action since the month of August of last year's trading session. And one thing we were able to come up with here was the key level situated around the $85 area. And one of the reasons why we have adopted this key level as our yardstick to guide trading activity for this week is simply because of how this level have played a major role in determining the direction of price action in the last 1 year. You'll see prior to the month of November of last year, we saw our price was above the structure, and then since the breakdown happened, we saw price trading below that structure throughout till the month of September of this year. Price was trading below that structure, which emphasized the strength of the sellers during that phase. However, since the month of September, we saw price broke out of the $85 level for the first time, leading into a situation where price appeared to come back to retest that zone. So in the last couple of weeks now, you will see price action has been finding buy pressure around that area, giving us signs that buyers may likely use that platform to anticipate another uptrend scenario. Now, outside of this key level at the $85 area is these ascending trend lines you will see here after connecting the series of higher lows since the month of March of this year. Now, in fact, we have a couple of this ascending trend line here. We have the major one right here, and we have the temporary one here. Now, for the temporary one, you will see that since the month of July, price action had consistently respected this temporary ascending trend line, as you will see. And since the beginning of this month, we have noticed buy pressure around that area. Now, fast forward to recent times, you will see that throughout the course of last week, despite the strong bearish momentum, we have seen how it had become difficult for sellers to break through that ascending trend line. Now, from a technical standpoint, you know how we do it in this community. As long as price remains above our ascending trend line, we continue to look out for patterns and structures that support the idea of buying that asset. However, if we look at the continued selling momentum we witnessed yesterday, as the week has started on a weak note, price is below our key level. Price appears to break down the ascending trend line. If this persists, we might likely see a situation where price drops into that major ascending trend line, maybe to incite an uptrend continuation. And in fact, if a further breakdown of that trend line happens, it could incite a sell-off. Now, if price will drop into this descending trend line, then we are looking at a minimum of 400 pips to catch here, and let's see how we can capitalize on this move. But if buy pressure persists here, as you will see that since the beginning of this month, that $82 zone area had continued to be a buying niche in this market. So if sellers are finding it difficult to break through this structure, we are likely going to be seeing an uptrend scenario here. Now, to make things a little bit clearer, let's scale down into the 4 hours time frame where we want to see things from the 4 hours perspective. Now, on the 4 hours time frame, this is what I was able to come up with. The first thing you will notice here, since the beginning of this month, price nosedive to the downside, and the inability of sellers to break through the $81 area throughout the month of October is a beautiful sign that buyers may likely use the $81 level as a platform to incite more buying opportunities. Now, in that regard, I have this whole area labeled as a demand zone, at least in the meantime, as long as price action remains above the structure. And if price breaks down, then this will give us a very comfortable opportunity to join a downtrend situation. But as long as price still remains above this demand zone, we need to be very, very careful, as we could see some buy pressure come in here. Now, despite the bearish momentum we saw yesterday, breaking down that ascending trend line with an engulfing bearish candle, you can see that as soon as price got into this demand zone, we saw a sharp rejection of that area, giving us a sign that buyers still have a chance of pushing price to the upside. Now, one of the things we are going to be looking at today is to see how market participants have been reacting to that $82 zone, which is conveniently sitting above that robust demand zone, to see how the market reacts. So are we likely going to see, there are two things we are going to be looking at today, one of which will be, is there chances that price will come back and retest this ascended trend line to incite a downtrend, or we're going to be having a breakout to incite an uptrend move, or are we going to be seeing a situation today where this major demand zone will be broken to the downside to incite a massive sell-off? Now, for us to have a clearer perspective into what is going on here, we will scale down into the 1 hour time frame to see how participants in this market has been reacting to this current zone. Now, while I was trying to decipher what we are going to be doing this morning, I was able to spot a range, as you will see, since price got into this area during the later part of the New York session. You will see how price has been confined within this, let's call it a 70-cent range, that is between the $82.80 level and the $82.50 area, to emphasize the level of indecision that has gripped this market. Now, you know how we do it in this community. Whenever price action falls into this kind of range, we want to exercise patience and wait for a signal to come, which usually comes in either in the form of a breakout of the resistance line for buying opportunities, or the breakdown of the support line for selling opportunities. Now, let's take into consideration the potentials the sellers have in this market. First of all, since price has been bearish since the beginning of this week. Now, if we consider this impulsive move to the downside, it appears that price action is gradually transitioning into a downtrend continuation pattern, maybe in the form of a bearish rectangle. Now, the confirmation of this downtrend continuation pattern will only happen if price breaks down the $82.15 level to give us another opportunity to add more sell position to our existing trade. So what I'm simply saying here is that the only condition that will make us to join the downtrend continuation based on the current structure we have here is to see price break down the $82.15 zone. Now, to further emphasize the potentials the sellers have here, you will see we also have this ascending trend line, which has been projecting some buy pressure, which for me I will consider as a retracement of the impulsive move that started yesterday. And you can see how it also shares a confluence with the support line here. So if price breaks down both the ascending trend line and the $82.15 level, then we want to be joining a downtrend scenario. Now, in as much as we look out for selling opportunities here, there are chances that buyers could take over this market. Remember, we just saw on the higher time frame that we have a beautiful demand zone sitting around the $81 and the $82 area, which has been a platform for buying power since the beginning of this month. And if that is going to be the case here, maybe the breakout of the $82.80 level could incite an uptrend move at this point in time. But personally, I wouldn't be jumping into a buy position like that at this current structure, basically because of the strong bearish momentum here. Then it's important that we have further confirmations before we jump into the position. Now, you will be asking me, why do we need a confirmation to join a buy opportunity if price breaks out of the $82.80 level? Now, very beautiful question if you ask that. Now, if you look at the structure, considering what has been going on here since last week Friday, you will see that price action has interestingly found lower highs, which further emphasize the strength of the sellers here. Now, if we connect the series of lower highs, you can see that we have this beautiful descending trend line, which will be playing a major role in guiding our decisions for today. And from a technical standpoint, you know how we use our descending trend lines in this community. As long as price remains below the descending trend line, we have no business buying that asset. Now, let's come back to the potential that buyers could come in here. So if price breaks out of the $82.80 level, taking us out of our current sell position, I would like to see price breach this descending trend line, where the breakout of the descending trend line would be a good signal that the trend line may no longer have the capacity to continue to negate the bullish attempt. Now, if this happens, I want to see some confirmation come in the form of a retest of the structure to incite an uptrend continuation. Now, interesting enough, the retest shares a confluence. Retest of the descending trend line shares a confluence with this temporary ascending trend line. So if this happens, we have a sweet spot here to join an uptrend continuation. Now, there is a caveat to this trading setup. In as much as we join in that bullish momentum, we still need to be very, very careful, as this is going to be considered to be a counter trend opportunities. So if price continues after the breakout of the $82.80 level, there is a structure around this area where we want to exercise patience and see how the market will react to it to decide if we are going to be adding more buy position or getting ready for another wave of bearish momentum. Now remember that we had this ascending trend line broken yesterday. This ascending trend line here, we saw it broken right around that $83.85 zone, and from a technical standpoint, when we have structures like this broken, we expect at some point in time price may come back to retest the structure and incite a sell-off. Now, if we join a bullish opportunity after the breakout retest of the $82.80 level and that descending trend line, as soon as price gets into the zone, let's ensure that zone between the $83.85 and the $84.60 zone, let's ensure that we move all our stop losses, secure the current buy position, and wait to see how the market would react to the zone. If selling pressure resumes again, that is, buyers are finding it difficult to climb back above the ascending trend line, resulting in a reversal pattern, mark out your neckline and take advantage of a downtrend continuation. That means that buyers are weak and they can't break out that structure. However, if instead price breaks out of the ascending trend line and the $84.60 level, then we might be in for another wave of bullish momentum. And also remember that we have the $85.50 level as another opportunity to add more buy positions to our existing trade. So this is how we are going to be managing the US All Spot for today. So I would encourage you to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So if you have any questions whatsoever as regards to my explanations, or you need some further clarification to an area you really do not understand, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds, see if there are any questions, while you can also use that time to mark out these levels on your chart. All right. So, in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we move on to the next asset on our watch list. So the next asset on our watch list for today is the USTech 100. Well, we've had quite an interesting situation in the last 24 hours as price action has gone through a choppy situation, but we still maintain our bullish bias here. Remember, yesterday we were looking out for buying opportunities after price action broke out of the 14,270 zone. Now, let's quickly look into how we started the week on the 1 hour time frame and what led to the decisions we made yesterday. Now, if you look at the structure, the first thing we observed at the beginning of the week was the fact that the week opened with a bullish gap, as you saw here, revealing to us the institutional sentiment that happened during the course of the weekend. And this, of course, gave us signs that buyers might likely be dictating the pace this week. Then, in addition to the bullish gap here, we saw how price action was initially confined within the range of the 14,270 and the 14,225 level. This gave us a beautiful flat channel to work with, and of course, you know how we do it in this community. As soon as we identify this kind of uncertainty resulting into a flat channel, we have no other choice than to exercise patience and wait for either the breakout of the resistance line for buying opportunities or the breakdown of the support line for selling opportunities. And of course, we see here that the breakdown of the support line never happened, which negated any idea of considering selling potentials in this particular market. And prior to our live session yesterday, I told you that I already had a buy position triggered at that point, and that for those of us who missed out on that opportunity, well, that we can re-exercise patience and wait for price action to come back and retest the structure to incite more opportunities to buy, which exactly was what happened here. Now, despite the old volatility here, you can see that the momentum is still looking very, very bullish. And of course, I told us all that we should be having our stop losses below the 14,225 area. So at this point in time, it's still looking very bullish as we currently have two buy positions running in profit at this point. So we have the first buy position triggered at the 14,270, running with approximately 70 pips in profit right now, while the second buy position is running with about 23 pips in profit, so giving us a total of about 100 pips at this point. For those of us who took advantage of this opportunity, kudos to you, well done to you for being on standby to capitalize on this opportunity. Now, the next thing we want to be doing now, you know how we do it in this community, we want to be moving our stop losses and secure the current buy position. And to do that, I'm of the opinion that anywhere above our entry point at the 14,270 seems most appropriate to lock in all positions into. So between the 14,300 and our entry zone seems most appropriate. Let's lock in some profit here and see how the market will emerge from this area. Now, with a well-secured position at this juncture, what is going to be our next line of action? Are we going to continue buying? And if we are, where do we want to add more positions? And are there chances that sellers could come in at this point? And if they will, where are we thinking of joining a bearish move? Well, before we go into that details, we are going to be running through the higher time frame quickly so that we can have an holistic perspective into what is going on in this market. And for the sake of those who missed out on our earlier editions, you have the privilege of being on the same page with us. So to start this week, we started our analysis on the daily time frame. Now, on the daily time frame, we were able to affirm the strength of the buyers in this market, as you will see that since the beginning of this year, price action had consistently and uniformly found higher lows, giving us a beautiful ascending trend line to work with. And you can see what has been happening here. Price has continued to respect the ascending trend line, not until last week's trading session that we witnessed the first time price action will break down that ascending trend line. And you know how we use our trend lines in this community. As soon as a trend line is breached, there are chances that we are going to be witnessing a momentum shift. Well, the breakdown of the ascending trend line did not come as a surprise, as you all know that we have been monitoring some lower highs here prior to the breakdown happened. Now that we have a breakdown of the ascending trend line, as we saw price move all the way into that area around the $14,000 zone. Now, the next question at this juncture is this. We all know from a technical standpoint that whenever price breaks down a trend line or key structure such as this, we expect at some point in time price may come back to retest the broken trend line in anticipation of a downtrend continuation. At least in the meantime, let's see what the potential these have. Now, if we look at in the last 3 days in this market, we have noticed our buy pressure has resumed. So can we consider this to be the beginning of the retracement into that area? And in fact, if we look at the distance between where price action is and that potential zone, let's look at the 14,650 first. That's over 300 pips to catch there. And if price will go to as far as those ascending trend line and descending trend line where we have a sweet spot, that's over 700 pips to catch. So we have between 300 and 700 pips to catch here if price does go through the retracement to test the structure that was broken. Now, with this in mind, I'm of the opinion that we might likely see that happen, and to guide our decisions for this week, we have a key level situated at the $14,000 area, where you know how we use our key levels in this community. As long as price remains above the key level, we want to look out for patterns and structures that support the idea of buying. And not unless the key level is broken can we really be sure that sellers will be dictating the pace going forward. So with the information we've gathered here on the daily time frame, let's scale down to the 4 hours time frame where I was able to identify a simple setup that we are going to be using for this week. Now look at what we have here on the 4 hours time frame. Considering what has been going on since the beginning of this month, it is quite clear that price action has been bearish. And interesting enough, you can see our price transitioned into a descending trend line. You can see after connecting the series of lower highs, we have the support, the resistance line of that descending channel. And when we connected the series of lower lows, we have the support line of that descending channel. Now, with this situation here, you will see that despite the strong bearish momentum that started this month, you will see how as soon as price got into that 14,100 area, we begin to see the reemergence of buy pressure as price action consistently found higher lows in the last since last week Friday, as you will see here, giving us an idea that buyers may gradually be gaining some momentum behind the scenes. And to further emphasize this was the appearance of what looked like a reversal pattern. After considering this impulsive move here, we saw price come back into the 14,320, 14,300 zone. We saw that price was unable to break down the previous low, resulting into what is looking like a reversal pattern in the form of a double bottom structure. And whenever we notice this kind of transition, the next thing we want to be doing is to mark out the neckline of that potential reversal pattern, which falls exactly around the 14,320 and the 14,300 zone. Now, to validate this reversal pattern, we need price action to break out of this neckline, which appears to be what is going on in the last 24 hours. As you will see, a lot of buy pressure has resumed around this area. Now, if this happens and price continues to remain above the 14,320, 14,300 zone, we want to feel comfortable in a buy position, and a further breakout of the 14,400 will have taken out the resistant line of that descending channel, to emphasize the strength of the buyers here. So everything at this point is looking very bullish to me. So I want to maintain a bullish bias on this one. And to further buttress this bullish expectation, let's connect the series of high and lows. And if we do that appropriately, we have a beautiful ascending trend line to work with ahead of today's trading session. Now, as long as price remains above this ascending trend line, we shall feel comfortable in our buy position. Now, the only condition that will make us want to sell now is for this ascending trend line to be broken to the downside to incite a bearish momentum, maybe into that key level at the $14,000 area. And if it gets broken to the downside, we look out for more opportunities to sell. Now, with the information we have here, it is quite clear that we are at a crucial juncture where price action has been oscillating around that neckline in the last 24 hours. So what we want to do now is to see how market participants have been reacting to that area on a much more lower time frame, and let's see if we can have a pattern we can use to guide our decisions for today. Now, scaling further down to the 1 hour time frame, things now get a little bit much more clearer. Remember, we have a buy position running. Price remains above our ascending trend line, and in this regard, we'll continue to hold on to a bullish bias. Now, for those of us who had missed out on these opportunities, well, we have another level at the 14,395 area, which happens to be the highest point price action has been for this week. Now, a further breakout of this area will be welcoming more buying opportunities in this market. So let's see how the market will play out around this area as we continue to hold on to a bullish bias on this one. Now, in as much as we're looking out for buying opportunities, you know how we do it in this community, we also want to keep tabs with the potentials the sellers also have in this market. Now, if we are going to consider selling, hereby negating the idea of buying, we need to see some beautiful confirmation to help us guide our decisions. Now, if we consider the continued selling pressure around the 14,395, and if this persists today and buyers find it difficult to break out of this level, then we might likely be seeing a crash. But if we are going to be seeing a crash, at what level, at what price level does it seem reasonable to join a bearish momentum? Well, if you ask me here, considering the fact that we have an ascending trend line already marked out on our chart, we will need price to breach this ascending trend line, that is, break down the structure to the downside to incite an opportunity to sell. And one interesting thing about this structure is how the 14,270 level shares a beautiful confluence with that ascending trend line. So if price will break down both the ascending trend line and the 14,270, then we want to start considering selling. Now remember that we are not going to be jumping into conclusions, as we want to see price break down, retest of structure to give us confirmations to join the decline to the downside. So this is the only condition at this point in time that will make us consider selling. But as long as price remains above the ascending trend line, we still remain very bullish in this particular market. So you can see how important the ascending trend line is going to be playing a major role in guiding our trading decisions today. So I encourage you to mark it out on your chart, mark out those levels, as we will be needing them as a reference point to guide our independent trading decisions today. If you have any questions as regards to my explanations, or you need further clarification at some point, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, while you also use that time to mark out these levels on your chart. All right. So, in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the GBPUSD, that is the cable market. And in fact, we've been doing pretty well in the last 24 hours as we took advantage of some buy positions in this particular market. Well, our buy positions still remain very, very intact considering the way price action is right now, as we have a higher high, a higher low, and in fact we have another higher high at this point in time. However, it is important to consider that the recent decline that happened this morning was as a result of the perceived potential US dollar recovery, which looked promising earlier today after concerns about the Chinese economic growth, which impacted the risk sentiment and, of course, supported the US dollar for a while. But it appears that the pound sterling is gradually gaining momentum further today. Now, in today's economic calendar, remember we talked about how we are anticipating crucial data releases from the U.S. economic docket. We had the housing price index, and we also have the Conference Board's consumer confidence index for the month of October, all setting the stage for the Federal Reserve's pivotal monetary policy decisions coming up tomorrow. Now, let's look at things from a technical standpoint and what has really been going on since the beginning of the week and what led to the idea of us buying the GBP USD. Now, the first thing we observed on the 1 hour time frame, that was yesterday, was the fact that we had higher lows in this market, giving us a couple of ascending trend lines to work with. So when we connected the series of higher lows here, we had this trend line, the temporary one, and we also had the major one right here. And of course, you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we feel comfortable in our buy position, while we also look out for more opportunities to buy. Now, in addition to those ascending trend line, remember that we noticed how price was initially confined within the 1.21330 and the 1.21060 during the first 11-12 hours of the week to emphasize the level of indecision at that point in time. But the fact that price action remained above our ascending trend line was enough for us to anticipate buying opportunities, as if you remember, we said here that the only condition that will make us consider selling is for this breakdown of the ascending trend line to happen, which of course never even came close. So in that regard, we position ourselves above the 1.21330 level, which happens to be the resistant line of that range, to trigger our first buy position for the week. And if you had missed out on the first breakout, the market came back to do multiple retests of structure, giving us the privilege to be part of this bullish move. Now, we saw a retracement during the early hours of today, and price has since then continued to the upside. Now, remember that we also added multiple levels to this chart. We said the 1.21600 level will be welcoming more buy positions. Remember, we also added one more level, had the breakout of the 1.21750, and in fact, all these levels has been broken to give us a minimum of 3 buy positions running in profit right now. And for those of you who took advantage of these opportunities, well, the first buy position will currently be running with about 60 pips in profit, while the second buy position will be running with about 35, making 95 pips, and the third buy position right now will be running with about 20 pips, making a total of about 150 pips, which is not bad at all for the second day of the week. Now, with a profitable position right now and with price moving significantly well in our favor, the next thing we want to be doing is to secure the current buy position by moving all our stop losses. And based on this current structure, I'm of the opinion that anywhere below the third entry here between the 1.21750 and the 1.21600 area seems most appropriate to secure all our stop losses. Now, remember that while you're trying to secure your position, you want to give enough room for price action to breed because of the event we are looking forward to today. And secondly, the fact that today is the last trading day of the month, there are tendencies of volatility to come into this market. So with a well-secured position at this juncture, what is going to be our next line of action? Well, for me personally, and based on what is going on here, I will continue to hold on to a bullish bias. And for those of us who are not part of the live session yesterday, I want to show you something on the 4 hours time frame which further buttresses the idea of buying the GBPUSD. Now remember that since the beginning of this month, despite the strong bearish momentum leading into the month of October, we saw how that area around the 1.21 and the 1.2050 area had become a strong buying niche in this market. We saw that despite the strong bearish momentum, sellers found it difficult to break through the structure, as every point in time they attempted to do so, it was met with strong resistance from the buyers. Now, the same thing also happened during the second half of last week as we saw buy pressure resume from that area. Now, with the buying platform identified here, I saw a double bottom structure around this area. Look at this. Look at the impulsive move right into this area. Price came back into the 1.214. We saw this higher low. Price came back into the structure, giving us a beautiful double bottom structure. And of course, when we have a double bottom structure like this, we need price to break out of the neckline to validate it. And of course, we saw what happened since the early hours of today. Price broke out, retest structure, further confirming the uptrend scenario. So everything right now, and based on what has been going on since the beginning of this week, is all screaming bullish for us. And how far will this bullish momentum go? Well, we don't know, but remember that we have this descending trend line that's emphasized the strength of the sellers in this market. In fact, we have a couple of them after connecting the series of lower highs. So we might likely see price action come into these trend lines, maybe to incite a downtrend continuation. And in fact, if price breaks out of these trend lines, we might be looking out for more opportunities to buy. So let's see how this is going to play out. And if this bullish momentum continues, we have over 200 to about 300 pips to catch here, at least in minimum, before a potential sell move could happen. So these are my views on the GBPUSD. So we continue to hold on to a bullish bias. However, for some of us who had missed out on these buy opportunities we had here, well, let's see if the market will come back and do some retest of structure. So let's exercise patience. There is still a chance that price could come back and retest the 1.21750, and if it happens, buy pressure will give us more opportunity to join the uptrend move. So mark out these levels. Let's see how this is going to happen, and by tomorrow we shall be back here again to review how well this asset has been doing as we get ready for the Fed's interest rate decision, and in fact the first day of the month of November. So if you have any questions as regards to what we have here, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the last asset on our watch list. All right, all right. So, in the absence of no questions, I want to assume that we are all on the same page. And in that regard, we move right into the last asset on our watch list for today. So the last asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And in fact, we've been in a tussle in the last 24 hours. Remember, we had the buy position triggered after price broke out of the $1,997.50 level. And since then, we had some struggle where sellers were trying to push price to the downside, giving us some lot of tension. I do hope you are able to hold on to your bullish buyers. If you did, you will be in positive territories at this point in time. Well, for me, I can say that the recent decline in the price of gold could be accompanied by a rise in open interest, indicating the possibilities of further retracement in the near future. Now, today being the last trading day of the month, the expectation that the Federal Reserve will maintain its hawkish stance to address inflation and the elevated U.S. Treasury bond yield is not favoring the buyers at this point in time. Now, this situation has led to an increase in demand for the US dollar, which is weighing on the price of gold around this point. However, there is something interesting that is going on in the market in the last 24 hours, which we are going to be looking at today. And if we are going to be taking a technical dissection of the current market structure, let's see how the market began for this week and what led to the decisions we made. Now, at the beginning of this week, it was quite clear that the market was consolidating. Initially, we saw price confined within a range that was between the $2,006.50 level and the $1,995 area to emphasize some level of indecision at that point. And one of the things I made mention of during our live session yesterday was the fact that if we consider the impulsive move that started on Friday, that the bearish momentum we're witnessing here at the beginning of the week may likely be a retracement of that impulsive move to incite an uptrend continuation. So one of the things we were looking at during our live session yesterday was to project where the retracement phase will end before the next phase of bullish momentum will happen. And to do that, we used our Fibonacci retracement tool, run it through the previous impulse leg, and we aimed at our golden zone area, which is usually between the 50 and the 78.6% of that impulsive leg. And in fact, we had the range between the 1,993 and the 1,984 area, where we said we shall be looking out for buying setups, maybe like double bottom structures, reversal patterns, higher low sort of a thing before we jump into the buy position. And during our live session yesterday, we acknowledged the resumption of buy pressure around the 50% retracement of that impulse leg around that area. And in that regard, I made mention that anywhere above the $1,995 level seems most appropriate to join a buy position. Well, personally for me, I did join around the $1,997.50 level as price is back into the positive territory at this point. So kudos to everyone who had held on to this position. If you have your buy position running, you'll either be in a minimum, if you took it from here, a minimum of 40 pips or about 20 pips around this point. So well done to you for being on standby to capitalize on this move. Now, in preparation for today's trading session, I had to identify a couple of levels and trend line which we will be using to guide our decisions for today's trading session. Now, the first thing I would like to acknowledge here is the fact that price has been bullish, and in fact, we had an ascending trend line projected at the beginning of this week, as we saw here that since last week, price action had consistently found higher lows, giving us a beautiful ascending trend line to work with. And as long as price remains above our ascending trend line, we want to feel comfortable in our buy position. Now, in addition to that ascending trend line, you will see here that that demand zone appears to be holding, as we saw that the lowest point price action has been for this week is around the $1,990.60 level, as sellers were unable to break down that structure. We saw the same thing also happen around here during the early hours of today, giving us signs that buyers are gradually gaining momentum behind the scenes. Now, with this situation here, it makes quite a lot of sense that we continue to hold on to a bullish bias. Now, in addition to that 1-2 again, everything is just screaming bullish here. Now, we saw price found lower highs here, giving us a descending trend line. Now, look at what has happened to this descending trend line in the last 4 hours. Price has finally broken out of that descending trend line, which further emphasized that the trend line may no longer have the capacity to continue to negate the bullish attempt. So it's quite interesting that the bullish bias we held on to yesterday still remains very, very valid at this point in time. And let's see how far this momentum is going to go. Now, a final catch here is the potential double bottom structure we have here. You can see price was unable to break down the previous low, and right now we have a neckline of this potential reversal pattern sitting at a very crucial zone, which is the $2,000 mark. Now, if price will break out of this neckline at a $2,000 mark, we look out for more buying opportunities, and a further breakout of the $2,006.50 level will be welcoming more buy position. So this is how we are going to be milking this uptrend continuation all the way to the upside. So for your buy positions here, your stop loss should be somewhere right below the $1,990.60 level at this point in time, and we remain bullish on this current structure. However, in as much as we're looking out for buying opportunity, and in fact considering today to be the last trading day of the month of October, we might likely be seeing some profit-taking activities that could incite some huge sell-off on this chart. Now, for those of us who are not part of our live session yesterday, let me show you something here that we saw at the beginning of this month that has been going on. It has been very bullish. So this is the month of October, and you will see that since this month began, price had respected this ascending trend line, giving us a trend line to work with. So at no point in time have we seen price broke down this trend line, which further emphasize the strength of the bias. Now, what I'm trying to say here is that since the month began, we have seen buying momentum. At least they bought at the lowest point here around the 1,820, and psychologically we expect that after buying and scooping over $100 on one single unit of the gold, it makes a lot of reason make a lot of reason to want to start taking some profits. And if we want to start taking profit, we are likely going to see price nosedive to the downside, maybe into this ascending trend line before another wave of bullish momentum happen. Now, if we are going to be considering the potentials of sellers, how do we want to join their bearish move? What do we want to see on this chart that will make us feel comfortable to join the bearish momentum? Well, for me to join the bearish momentum, first of all, we want to see price back below this descending trend line. That's the first thing. We want to see price below this descending trend line. And secondly, we want to see price break down this ascending trend line to negate the strength of the buyers here. Now, if this two happens, then we will have a situation. Now, the third one, is this is the lowest point price action has been for this week, which is the $1,990.60 level, as you will see right here. Now, if I want to consider selling, I would like to see price take out all the buy positions at that lowest point, leading into something like a breakdown of both the ascending trend line, the $1,990.60 level, continue selling pressure below the structure to give us an opportunity to sell. And if price continues to drop, the breakdown of the $1,980 level will welcome more sell position. So that is the only condition that will make me want to consider selling here. So let's mark these levels out on our chart, as we will be needing them as a reference point to guide our independent trading decisions. So these are my views here on the XAUUSD for today. So I do hope I made myself very clear. If you have any questions as regards to my explanations, or you need me to do some further clarifications to what you do not understand, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off to see if there are any questions, while you can use that time to also mark out these levels on your chart. All right. So in the absence of no questions, I want to assume that we are all on the same page on this one. And it has been a wonderful moment with you guys today as we took on 4 major assets, which is on our watch list for this week. And they are the USOILSPOT, the USTech100, the GBPUSD, and of course the XAUUSD, all of which we were able to use fundamental tools such as trend lines, key levels, and chart patterns to strategically position ourselves ahead of the New York session today. So I encourage us all to allow our structures to mature before we jump into any positions. Please note that it is very important for you to ensure that you have your stop losses in place, especially on a day like this, which is considered to be the last trading day of the month, where majority is expected to be closing in and rounding up on their positions ahead of the new month. So on this note, I want to wish us all the best of luck for today's trading session. And for those of you who joined us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. I encourage you to be part of the subsequent editions, as the more time you spend with us, the better you get to understand our analytical approach in this community and eventually be able to use the information you gather here to make your own independent trading decisions. So on this note, I wish us all the best of luck, and I wish you a new month, an happy new month in advance. Do have a wonderful evening, everyone. Bye-bye.